You're going to see one day headline news about alarming concerns. Can the United States government pay back even its interest? It's probably still a few years away, but it's something in a lot of people's lifetime they're going to see.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 5th through May 12th, 2025, while supplies last. First this week, we feature 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4.9s fine, and we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. And finally, backdated 1/10-ounce Platinum UK Britannia are just $29 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich from Peter Grandich & Company. Peter, thank you so much for joining us today.
Always a pleasure, Elijah.
Well, it's great to have you today. Last time we had you on, markets were in turmoil, and we also saw gold, making new all-time highs. Since then, we've seen a rebound in the stock market. The stock market seems to have recovered quite a bit, and gold has sold off a little bit, but still really it seems to be quite strong there. Your perspective on the current state of the markets, because I think some people are concerned that maybe we could see a second leg down in the stock market here, and what we're seeing right now is a dead cat bounce. What do you make of what is your pulse on the market right now?
So first of all, when the market originally cracked, I actually felt for the first time in quite a while that the market had a good chance to have a very strong counter trend rally, which as of today, I wrote that I thought that rally, which has occurred, is reached its peak, and that if I was long, I would, by the end of the day, not want to be long. So it didn't come as a big surprise. It was overblown to the downside on the trade stuff. People just have to understand there's an entire generation, almost half of financial advisors now practicing weren't even born when I started in the early 1980s. So there's an entire generation that just thinks you buy dips and markets always go up. So it's going to take a lot more than just one decline to eventually keep the stock market down. And that's another thing you got to keep in mind. And then on the other hand, who would have thought that we'd be thinking, well, gold's come down to all the way to 3,300. Yeah, I think we don't lose sight of that, especially when less than 18 months ago, we were struggling to see if we'd get above 2,000. So I think those are two perspectives is when you talk about both those separate markets to keep in mind. Now, of course, everybody that's watching would want to know, where do you think it's going? Well, first of all, anyone that makes a living out of looking in a crystal ball, trust me, you only become an expert on how to eat a lot of broken glass. So neither you or I or anybody you will interview, no matter what they claim, knows. What we can do is try to make some educated guess here, Elijah. We do know that the stock market is still somewhat a resemblance of places where people buy and sell part ownerships of businesses, and businesses depend on economies. But that has changed radically over the 40 years. When that used to dominate participation in the stock market, now that's an afterthought. Half the money that's in the stock market's in passive funds. It's simply people placed it with a management group in order to track an index or an indice. And they're not actively trading, nor is the manager buying and selling individual stocks on their own merit, but just in order to track an index. And of that remaining half, 2/3 of it's trading through some computer algorithm program, which may just trade on words in a headline to some very sophisticated trading. And only a smaller percentage of all those three is what the stock market used to be, places where people are buying and selling part ownerships of businesses. So the economy, while important, isn't as directly impacting on the stock market as it was 40 years ago as well. And I think those are a couple of things we have to remind ourselves, that especially those of us that go back 40 years, that this isn't our dad's or mom's stock market anymore. This is a unique, highly sophisticated, technical, casino-like atmosphere. And we even have things where still 98% of the public or professionals don't even know, Elijah. We have things that are now called black pools, where large financial institutions are trading large blocks of stocks between themselves. We never see those trades. So we're not even seeing all of the activity that the stock market's generating like we used to at one time before. So there's a lot of things that are important there. And of course, on the gold market, I guess the people that are still not pleased with the move in gold are people like me that own a lot of junior resource stocks that haven't participated. Because if they're clients like yours that just bought bullion a few years ago, they should have you down for a special Christmas present this year, or at least got one this past year, because it's been a phenomenal move. It has outperformed stocks and bonds for 25 years. And so give credit to those that have gone to the physical market. And quite frankly, it's not cheap anymore, but the reasons that drove gold here, which we could discuss, are still very valiant. And that's why I think after an inevitable correction, there's still a lot higher prices to go on the gold market.
I think that's definitely the position of many of our viewers out there, that there's still a lot higher to go, and possibly in the stock market. You mentioned how it's kind of a different creature now, but that probably there's a good amount of downside left. I wanted to get your more detailed perspective on that, because when it comes to, I guess, what we've seen with the tariffs, and this big shock to the market, how much of this do you think this really has to do with Trump's tariffs? And I had a client call the other day and asking me, well, it's so strange because before Trump was elected, we were all talking about how, the stock market is overvalued, has to have a huge correction. And now it seems like everything's being blamed on Trump. But these issues, I think, were there before Trump got elected, right? So your perspective on that, how much do you think this downside in the stock market really is attributable to Trump, or was he mainly, it was the tariffs, were the tariffs maybe the catalyst for this crisis?
So my attitude to the stock market is probably somewhere in the middle of what you said there. I am not one that's looking for a huge downfall of 50% or some crazy, crash-like atmosphere. What I do think is important is I don't think it has a lot of upside potential. Certainly not to give you the same chance of above average returns that the last few decades has given. And why that's critical is because there are a whole set of people still to this day in our planning group. Just this morning, 7 to 8 out of 10 families that come in to see us, from everyday workers to some very, very wealthy people, and I still occasionally hear from an athlete or two that I used to deal with a lot. They are living at least one lifestyle, if not more, above where their finances are. And part of that is they've grown accustomed to above average returns, including from the stock market. And their plan is still based on that above average return continuing. And so it's not so much if the stock market goes down that people should be concerned, but if it doesn't go up, because as it goes flat, which I think my call this year was either side of unchanged with a bias lower, and over the next few years, lower to maybe a little bit above where it's at. I don't think we're going to see anywhere the performance. Well, when you go and look at, especially when we see people's plans that were already done by somebody else, and we see their projections for the next 3 to 5 years, they were still based on above average returns. And people are living those lifestyles on the expectation that's going to happen. So I really think one of the attitudes people should take, Elijah, is it's not how much you make, it's how much you don't lose, which is going to separate the winners from losers going forward here. And that preservation of capital now is more important than capital appreciation. And of course, if people can remember, that's what gold's primary purpose was. It's been great that it's been a great capital appreciation tool, especially in the last 18 months, especially for me, for someone that got out of stocks and bonds in 2021 and bet on gold going up a lot. But let's not lose sight of what gold's historic and main purpose should be. I'm singing to the choir, obviously, but and that, I think, is a more appropriate time for people. And let me throw in something. If you were going to get to it, I'm sorry to hop over, but for the first time in probably a generation, maybe my entire career, I now view silver in the same breath as gold. And so I think when we do talk about metals, we need to talk about owning gold and silver now. When it used to be, for me, I used to get, like I said, people got mad when I said silver was like kissing your sister. But I do think it's worthy now, and something that we should talk about.
And that's because of the dramatic gold silver ratio above 100 to 1 at the moment.
Yeah, that's the first purpose. But the second purpose is, in some people's eyes, this is the first purpose, because it's manipulated, it's clear, blah, blah, blah. Every time it gets to where, we said that about gold 20 years ago. Not just me, there was a group, Gatter and others, we were outspoken. And we were called tinfoil hat people and all. Well, it clearly came shown that it was being manipulated. Eventually, a lot of people were charged. A lot of people pleaded guilty. I think the same has been going on in the silver market. Of course, I'm not alone in that. I don't think it's the only excuse, or just an excuse, but I think it's a purpose. But what's changed in the silver market from 10 or 20 or 30 years ago is a much better bullish fundamental argument for it, just on usage itself. And if we get that kick into people starting to own silver like they want to own gold, that'll really make that dynamic of supply versus demand quite bullish, get us through that resistance area. And then it's, it would not surprise me then, not yet now, but then, that it even outperforms gold to the upside.
Now, you mentioned how gold and silver here are really wealth preservation assets. And I think that gets back to what you were saying as well, that the goal here is to preserve your wealth and lose the least, right, in this kind of environment. And I think some people may hear that and say, well, we can just get into cash, right? And then we're not going to lose anything. But the problem is that the value of the dollar is falling at the same time as we see inflation. So just turning everything to cash is not the solution.
Well, that's a great argument. And there seems to be a camp of the dollar still staying relatively strong. And I argue with that. And that's why I'm such a big believer in the BRICS and moving away. Long before this trade war came out, you and I know that I was speaking about the world is moving away from the United States in more ways than one, including commerce and monetarily. And I really think, and it's very interesting. I don't know if you had other guests to speak to you about this, Elijah, but there is a woman who was pretty close to Trump, and she's done economic advising, and she's banging the drums on a gold bond that we may see one as early as this July. We do know now that the U.S. banks come July 1st, tier one, gold's as good, as anything else, and that in itself has some advantages for gold ownership. So the argument for the dollar is also hurting if you're going to cash because of how it could deteriorate more. Now, of course, for us, gold is priced in dollars, but for others that are in other countries using those currencies, they've seen some good gains on the currency exchange. I wouldn't play it for a currency exchange. I think people don't recognize how much more inflation is than what the government tells them. No, I shouldn't say it. Let me correct it. I think people do realize they're just upset that the government doesn't demonstrate that. There's no way that inflation is just going up 0.2 or 0.3 of 1% a year. On wherever you live, I don't care what it is, anything to do with household, insurance, car-related, home-related, clothing, food, business expenses. We're getting a 20% raise in our electrical rates here in New Jersey next month. And so I think the other argument that you have to keep in the back of your mind is the great purchasing power that gold has demonstrated. It still buys today what you needed to buy 100 years ago, 500 years ago, 1,000. You can't say that about any currency, especially the dollar. So don't lose sight of that. We all got caught up because we've had this really implosion. But why did we have the implosion, Elijah? Why has gold done what it's done? I think we've discussed that, and I think we're going to pretty well see more of that play out in front of our eyes over the next 12 to 24 months.
And I know you're heavily invested in miners as well. Can we get an update on that? What we've seen miners do? I mean, we've talked about this, how miners have actually done pretty well over the last year or so. But where do you see them heading, if we continue to see gold outperform here?
Well, let's take the two separate ones. We'll take miners, and then we'll take the most riskiest, the junior resource market, because there's news there as well. We do know now that many of the producers now are, and we like to say, printing cash, because their free cash flow from the difference of what their cost is to bring out an ounce of gold and what they're able to sell it for is just at record levels. And this free cash flow is just dramatically increasing at a time when many other industries are seeing flat to down earnings. And that is attracting the generalists. The people that normally don't play gold stocks are now coming to that market. But what people should take notice, and it's the first time, in fact, just before you and I went on, I put a few of the charts up on my own X page on how the little junior players, the highest risk, but nevertheless the ones most leveraged to higher metal prices, are breaking out. Charts are finally, after many years of bearish patterns, are moving and showing. We've even noticed the accumulation, even when gold had its little corrective phase the last 2 weeks. Those stocks used to just fall out of bed. Not only didn't fall out, some of them went up. So the mining and exploration end of the gold, silver, and copper are all still peaking, meaning moving higher, and the ones that have not moved up till now are finally starting to show that there's daylight ahead for them.
Now, before we let you go, I did want to also touch on, I guess, what we're seeing here in when it comes to the dollar, as we're talking about, that it seems like we're in a situation where it's not just preserving the amount of digits that you have in your bank account. But I think it's just so important to stress the fact that the value of those digits is falling. So we have to get out of this, this mindset that, just because the numbers are the same, it doesn't mean you still have the same purchasing power. And you mentioned how, energy prices for you going up 20% here, and the official numbers are really not reflecting the kind of price increases that we're seeing right now. Any last thoughts on that regarding, the real impact you see inflation having on the average person going forward?
We got a little break because of the oil decline, which will lead to lower gas prices. Although if you're in California, gas prices are going up to the roof because of their own distribution and refinery issues, among many issues in that state. I think that state is in more trouble than some countries in the world, and it's big enough to be its own country. But the inflation number overall is higher than what we're told. I think anybody recognizes that that's been living the life. Inflation is a major concern to the government, but not a concern enough to advocate in the way that you think the Fed is doing it, because we're about to see tariffs hit home. They're going to cause inflation to rise. And we're also seeing them add another $5 trillion to our debt. And people just going about like, so it's 40 trillion. Who cares? You better care, because there's coming a point now, and we're seeing it trade in the bond market, that even with economy slowing down and things looking better, interest rates really can't drop a lot. And that is because people concerned not only about inflation, stagflation, that there'll still be some inflation even though the economy weakens, but the ability to pay the interest. And I am telling you, you're a young enough person that you're going to see one day headline news about alarming concerns. Can the United States government pay back even its interest? It's probably still a few years away, but it's something in a lot of people's lifetime they're going to see. And that's a subject as the weeks and months go on, Elijah. Look to have more discussions, whether with me or others, because that's the untold story right now, is how fast we're moving towards that, which it just 10 years ago was a lifetime away. Now it's within reach. And if this government, which clearly you can rave about Trump doing some things, but this government is only accelerating debt and deficits as a whole. And we really don't have much more time to allow that without it really coming the crisis that America ever faced economically.
And if our viewers are interested in learning more, they can go to petergrandich.com. Again, as I always mention, one of the things I love about your company is you take a faith-based approach as well as, really tying that into the financial arena. So we really appreciate that. Can you tell us a bit about the services you provide there and any last thoughts you had?
Well, I do. My Catholic Christian faith is critical and first. I wear it on my sleeve in business and life. We do have, and I know you are of the same faith, we do have a new pope. I want to be optimistic. I want to hope he's better to what I believe our faith is called for than the past pope. But seeing will be believing. That's what I'm going to say for now. In terms of our business, yes, primary and sole business left in my life is being involved in a financial planning service that focuses on estate, retirement, and exiting business planning. And I still have a blog. I also have an X page. And I do still talk about a handful of small little mining companies that I own, and they may also be blog sponsors of mine.
Fantastic. Well, Peter, we really appreciate your time today coming on Liberty and Finance. We really appreciate your approach as well. Again, petergrandich.com is where people can find you. Thank you so much, Peter, and God bless.
God bless you, my friend.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 5th through May 12th, 2025, while supplies last. First this week, we feature 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4.9s fine, and we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. And finally, backdated 1/10-ounce Platinum UK Britannia are just $29 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.